Okay, welcome everybody to today's webinar about how market intelligence can help investors to generate alpha, or in other words, create that knowledge differential to help validate market movements and investment theses, perform due diligence, and monitor portfolio companies. Today we will be sharing insights into companies such as Nordstrom, Blue Apron, and Amazon and Whole Foods. Today's webinar will be presented by myself, Jessica, a Product Marketing Manager at Similarweb, and my colleague Stu, Senior Enterprise Sales Executive at Similarweb. So thank you, Stu, for joining us.
Thank you very much, Jess. Hello, everyone. Very excited to be here today to tell you more about the ways Similarweb works with our investor clients.
So as a product marketing manager, I have spoken to many of our investor customers globally, learning about the different challenges they face, and we're very much looking forward to sharing with you today the findings and knowledge that we have gained from them. Stu specializes in the investment and consumer finance verticals, working with many global leaders in these industries. So it's great to have him with us today. The agenda for this webinar will be to cover a short introduction to Similarweb, including how we collect our data, and as well as sharing with you some of our existing customers in the investor and finance industries who have already seen the value of market intelligence. Then we will cover a number of different use cases, including analyzing public companies prior to their quarterly earnings calls, validating market perceptions around M&A and IPO announcements, performing due diligence on potential new investments, and monitoring your current portfolio. At the end, we will have 10 to 15 minutes for Q&A to answer your questions that you asked throughout today's webinar. The webinar will run for about 30 minutes, and please do ask questions throughout the webinar using the question pane. We really want to hear from you today, so you should see that panel where you can type in your questions throughout the webinar, and we'll get to them at the end. I also want to point out that we have attached a few handouts to this webinar that you can feel free to download and share with your colleagues as well. We have a joint report that we put together with Crunchbase about the Crunchbase ranked top 50 companies. We also have a white paper covering a few major news stories, some of which we'll be talking about today, the Blue Apron IPO, the Amazon Whole Foods acquisition, as well as a nice article about how data is disrupting the investment industry. Finally, we have a one-pager which just summarizes the use cases of market intelligence for investors at the high level, again, much of which we'll be talking about today. Okay, so now we're just going to cover a brief overview of Similarweb, its solutions, and our data collection methodology. Similarweb is headquartered in Tel Aviv and has offices all around the world serving our global market. We recently raised $47 million, which takes us to a total raised of over $110 million. This will help us scale our business even further and continue to develop innovative, best-in-class market intelligence solutions to meet the mass demand that we've been seeing. Data is the foundation of our entire business, and we take a very unique, multi-dimensional approach to how we collect our data. We leverage hundreds of sources, which we categorize into 4 distinct groups, which you can see there: our global panel data, our global ISP data, public data sources, and direct measurement data. So I'll just say a few words about each source. Regarding our panel, we have a dedicated product team at Similarweb that is responsible for building and partnering with hundreds of consumer products that make up this global panel. Our products are installed on hundreds of millions of devices around the world, and our panel covers 226 countries and territories, making it the largest and most diverse panel in the industry. Global ISP data is used to supplement our insights about digital behavior. We partner with internet service providers around the world that provide anonymous data that is almost identical in structure to our panel data. Similar to how search engines like Google and Bing index the web, Similarweb uses an automated technique of capturing and indexing public data from over 1 billion websites and app pages every month. Similarweb processes this data by sorting and structuring the raw data, cleaning and enriching it, to make order out of all of that chaos. And finally, having the ability to measure our estimations against directly measured data is one of the most critical functions in accurate statistical sampling. Similarweb leverages a growing data set of hundreds of thousands of websites and apps that have shared their directly measured data with us, and Similarweb is then able to transform all of those data sources into intelligent estimations across all sites and apps for all geographies. So lastly, we bring that data to life through data visualization, which is critical for delivering Similarweb's market intelligence insights in a way that makes them accessible, digestible, and actionable for you. Our customers are accessing Similarweb insights via 3 primary means: our SaaS platform, the Similarweb Pro, our customized reports called Similarweb Digital Insights, and Similarweb's API. All of these are designed by experts to get you the right insights at the right time. Similarweb provides insights on every website and mobile app in the world, analyzing at the level of a website, an industry, a keyword, or an app category. We provide traffic data, traffic sources data, as well as engagement, audience, and many other types of metrics. So I think we all understand the importance of market intelligence data, but why Similarweb specifically? Similarweb's unique selling points include its global and multi-platform data covering over 190 countries in our worldwide view, and with granular country data for 58 markets across desktop, mobile web, and mobile apps. We provide insights at the level of a website, an app, an industry, and keyword, as I said before, including traffic, engagement, audience, and conversion data. Finally, with our simple user interface and API, it is very easy to draw out the key insights for your needs. Okay, so I will now hand over to Stu, who is going to walk us through some very interesting examples of some of the recent hot news stories we've seen that you are probably all familiar with. And Stu will show us how using Similarweb's market intelligence data, you could have perhaps even predicted some of these events before they became public. So I am just going to hand over my screen to Stu right now.
Thank you, Jess.
And you can take it from here.
Great, thank you. This is again Stu Rogers, and as you'll see when I am going back and forth on my screen between some still slides, the Similarweb Pro SaaS, by the clock on my screen, I'm sitting in our New York office. Out of this office, we've, over the years, spent a lot of time with our investor clients, and I'm very excited to go into some of these examples and case studies today. We're going to start here with Nordstrom and looking at the ways that Similarweb can drive analysis pre-public filings, most recently the August 10th Q2 earnings report. This is a very common use case across our investor client base. I'm particularly excited to focus on the data and the foresight that Similarweb had here, because in the case of Nordstrom, we saw these earnings come at a time of growing calls for the death of brick and mortar, as major department stores are reporting very weak sales. Nordstrom had 1.7% same-store sales growth relative to negative sales from tiers Macy's, Kohl's, and JCPenney. Now, in preparation for those Q2 earnings, investors with access to Similarweb could start to explore the brand's digital presence. Starting with the most basic metrics, the more visitors a site sees, the more potential customers it has. And we're going to let the Similarweb SaaS start to speak for itself here. What we're looking at is now for Nordstrom.com. We're looking at the last 18 months of data, and we're looking at that data set here in the United States. We also are looking at a combined view of traffic coming in from both desktop and mobile devices. Over the past 18 months, we can see that Nordstrom has seen an average of 1.3 million visits every day. Now, 53% of those visits are coming from desktop rather than mobile. So while we're running year over year, quarter over quarter, just more general period over period analysis, here we actually see that Nordstrom has slightly decreased over time in this view. That said, the desktop traffic has actually increased by 7%. With some basic understanding of the way audiences buy online, we can actually see this picture and that increase in desktop as a positive, with users more likely to make a purchase on their desktop rather than their mobile device. So there are ways that we can actually look at that overall negative trend and find some deeper insights. Now, besides visits, a lot of our investor clients will start to internalize the ways that they can drive analysis through engagement metrics. And here we see Nordstrom being relatively stable. What we can see is each visit to the site took in an average of 6.17 pages per visit. Each of those visits lasted 5 minutes and 10 seconds. So we'll look at that visit duration as well. We'll also see a bounce rate of approaching 39%. Now, I've taken a step back. A lot of these metrics also, when we're exporting the data, will again be run in the quarter-over-quarter, year-over-year analysis. And what we've seen in doing that is when we compare these metrics to Q2 2016, we do see that stable performance. We see visit duration is decreased by 3%, bounce rates dropped by 2%, and pages per visit is actually increased by 11%. So taking all these factors into account, we see an indication of an overall neutral trend for engagement at Nordstrom.com. And while we'll always begin insights with the site's own data here, in this specific instance, we're not seeing much of a change. Where we're going to start to really drive these insights is when we compare the site to its competitors to start to paint the bigger picture of the online retail market as a whole. So what we've done here, when we now look at loaded in Nordstrom.com, Bloomingdale's, Neiman Marcus, and Macy's. We've got that same time frame. So we're looking at the last 18 months. We're looking at the US again, and again, that combination of desktop and mobile traffic. What we can start to see here is when we're looking at the larger competitive set, we see that Macy's leads in terms of traffic with an average of 74.75 million visits a month. That's next followed there by Nordstrom at 37 million, Bloomingdale's there at 8 million, and Neiman Marcus at approaching 7 million visits a month. Now, again, taking a step back, when this data is exported and run into internal systems for deeper analysis, we're comparing this data to the last quarter. We actually see an overall decrease. So the site most significantly affected by the decrease is actually Macy's, losing nearly 38 million visitors in Q2 2017 compared with that same period in 2016. So we see that as a 19% drop. Bloomingdale's also saw its numbers of quarterly visits drop by 23%. And therefore, when we're looking at Nordstrom in the larger competitive landscape, we see that its 10% drop, when it's in proportion, is actually very, very strong in terms of performance. Now, when we go back to looking at Nordstrom here, apart from seeing what still was actually a slight decrease in the second half of Q2, we saw that it was still higher overall than that in Q1 of 2017, with each visit including more page views and the visits actually bouncing off less as well. We're going to be focusing here in that section of Q2 of 2017. Jumping back to our stills here. This is exactly what Nordstrom was reporting in the successful earnings that they released on August 10th. What Nordstrom highlights there on those quarterly earnings is that in executing its digital strategy, the company delivered online sales growth of 20% at Nordstrom.com, reflecting its largest volume day in company history, and 27% at Nordstrom Rack Outlook. We can go even further beyond just desktop and mobile traffic and engagement metrics and actually start to view specific sections of each of these sites. Just as a quick view here, we'll look at that Outlook announcement, and we'll go deeper here. What we'll see is the 27% growth in Outlook, the members-only shopping website that offers flash sales, limited time sale events with top brands. It was purchased by Nordstrom in 2011. We can actually see the sections of the site that gain the most traffic when we look at them in a specific period. That also allows for us to get visibility into the components of the basket, which are going to be confirmations of expenditure. We'll see that here in number 6, and we can start to do some deeper analysis on the ways we see that checkout flow. This is a place a lot of our investor clients will focus when they're running their deeper analysis leading into publicly released earnings.
Thank you so much, Stu. Okay, so we've talked about Q2 for Nordstrom. So just before we move on to our next use case, just for fun, we wanted to put the question out there to our audience today of, do you think that Nordstrom will beat analyst expectations for Q3? So you can vote on screen, yes or no. Just really nice to get your feeling around whether you think Nordstrom will beat the analyst expectations for Q3. We'll give you a few more seconds there to vote for those of you that haven't so far. I can see it's pretty neck and neck. I'm going to close the poll in a few seconds and then share the results with you. Okay, launching now. So it's pretty almost 50-50 that 44% of you think that Nordstrom will beat the analyst expectations, 56% of you think they won't. So let's continue to watch this space. We certainly will be monitoring the situation at Similarweb. And if you want to run through a Similarweb analysis of Nordstrom or its competitors before we get to Q3, please do reach out to us and our product consultants will be very happy to help. I will now hand back to Stu, who is going to share with you our analysis of the online grocery market following the recent announcement of Amazon's acquisition of Whole Foods.
Great. Thank you, Jess. It's a good place to start looking at the preemption and the analysis leading up to quarterly results. It's also more fun, I think, to look at a major acquisition event. It's no surprise that Amazon has once again disrupted a market as it's now setting its sights on the way Americans buy groceries. What we'll do is start to go through some of the ways Amazon, for instance, or any investor with the preemption of this upcoming event could have built out some market intelligence on the grocery market as a whole, especially as it plays into the digital performance. With definitions of what Amazon was setting its sights on, we're looking at a $675 billion US grocery industry. That said, online shopping is still not widespread in the industry itself. Forbes is reporting that about 1% to 3% of the industry sales are made online. Similarweb's data shows a parallel trend. In the past year, we see desktop traffic to the top 10 grocery sites increasing by only 2%. So while we will, in the graph here, see that specific players have seen traffic increases, they've been at the expense of traffic to competitors rather than an expansion of the entire market. Now, similar next step beyond just traffic, when we start to actually dissect some engagement stats. These also are indicating a relatively stagnant market with slight improvements. It's pretty clear on the top left here that Kroger.com is getting the largest volume of traffic. That said, the site struggles to maintain an engaged audience. While bounce rates are comparable to the rest of the industry, we see that the number of pages per visit to Kroger.com is 26% below the industry average. Further, the average visit duration is 2 minutes shorter than the competition. Ways that we'll use those engagement metrics is to, again, tell that deeper story beyond the traffic. And these factors here for Kroger indicate a weakening consumer engagement, which could have had some contribution to the recent drop in stock price. Shifting to the acquisition target here, when we actually talk now about WholeFoodsMarket.com, Whole Foods maintains its place as the fourth most visited grocery shopping site. That said, its traffic has dipped 16% over the last year. It's additionally got the highest bounce rate in the industry at 46%, and nearly twice the average of the top 10 grocery sites. It's got the lowest number of page views per visit and less than half, which is less than half of that of the top 10 average again. Audiences also spend less time on the site, 3.8 minutes less than the top 10 average. It's no surprise that the Amazon entry into the market is perceived as an affront to Walmart. specifically now as we're looking at Amazon versus Walmart through the lens of the grocery industry. When we're looking here at year over year, we see that the subdomain grocery.walmart.com has outperformed the competition by growing its traffic. Where industry traffic grew only marginally, the site's traffic increased by 62%, pushing itself from the number 7 spot in May 2016 to the 5 spot, close to now WholeFoodsMarket.com. So we see the most significant change in traffic starting in July 2016 and continued improvements since. Groceries.walmart.com is also winning in engagement, outperforming the remaining players with a 25% lower bounce rate than the industry benchmark, 5.5 more pages per visit, and 2.3 times more time spent on that site than those competitors in the top 10. Going another layer deeper, the ways that our investor clients dissect dominant peers in a given market is to actually discern where that traffic is coming from. It's a very standard way to analyze the strength of those visits we see. Now, traffic sources help illustrate which strategies have been successful in improving performance. And again, going back to July 2016, and continuing through the fall, we see significant increase in direct traffic to Walmart, which indicates that the brand is likely using substantial offline presence to direct customers to their online grocery channels. It's a quick definition here on what we're looking at. Direct traffic and that increase there is often indicative of brand strength. That is traffic that's going directly to the domain or clicking on a benchmark. We also see organic traffic, which is going to be traffic that's coming in through a search engine through the organic results in that search engine result page. We see paid traffic, which is going to be a paid placement on that same search engine result page. Referrals, often indicative of partnerships, traffic coming in from social media, traffic coming in from email, and then traffic coming in from paid display ad placements. While 60% of Whole Foods traffic is actually coming from organic search, it's a bit of a change than what we see there in that strength there from Walmart. So we want to transition back to the Amazon target. And that is going to be now looking at Whole Foods Market. So as we saw that strength in direct traffic to groceries.walmart.com, we see that Whole Foods actually gets about 60% of its traffic there from organic. And what we see even further, diving deeper, is this is actually fueled by branded keywords, most of which are related to store locations and career opportunities. Only one of those 10 top words is actually related to deliveries. We can go into the specifics, and I'll filter that by organic to actually give full insight into the keywords that are driving that 60% of all traffic to WholeFoods.com. Now, we're at a point where we've seen the shareholder approval of the acquisition. We've seen the pricing strategies implemented at Whole Foods, and we've also now seen the shares in other online retailers tumble. Our teams are working hand in hand with many of our investor client base to build out analyses of the grocery industry as a whole in light of Amazon's entry into the grocery market. We look forward to continuing those conversations with a lot of you on the call today.
Thank you, Stu. Okay, so now we're just going to do another quick poll, or this is more of a quiz question, just for fun. So now that we've talked about the Amazon Whole Foods acquisition, we want to ask you the question of how much do you think traffic to WholeFoodsMarket.com increased on the day that Amazon announced the acquisition? So the acquisition was announced on June 16th this year. And please vote as to how much you think the traffic to WholeFoods.com, WholeFoodsMarket.com grew on that specific day. Was it 80%, 25%, 50%, or 200%? Give everyone a few more moments to vote there, and then I will close the poll and share with you the results again. Once we show the results of the poll, Stu will then show us in the Similarweb Pro itself the answer, as we can drill down into daily traffic granularity there. Okay, I'm closing the poll and sharing the results. Okay, so the majority of you, 38%, think that the traffic grew by 200% that day. 33% of you think it grew by 80%, and the rest of you by 25 or 50%. So most of you are aiming high there. Stu, I'll now hand back to you, and you can show us the answer inside the Pro.
Sure. This is very straightforward in terms of the ways that we'll look at this data, because we'll look at that traffic with daily granularity again. So when we're looking at Whole Foods, we look at the announcement here coming on Friday, June 16th. We see that Thursday, the 15th, we're seeing a total of about 177,000 visits. By the day of that announcement, that jumps up to about 317,000. So those of you that chose 80% were correct.
Well done. Thank you, Stu. Okay, so our next example we're going to talk about today is around the Blue Apron IPO. So following that announcement earlier this year, we decided to look back at Similarweb data to analyze the performance of Blue Apron leading up to its IPO announcement. So Stu will now walk us through that analysis and reveal what we found about Blue Apron and the market that it works in.
Great, thank you, Jess. We've gone through dissection of preemption of public earnings. We've gone through the ways that we can run a market analysis on a significant acquisition event. Again, one of the most common use cases of Similarweb driving analysis is going to be leading up to IPOs. We've chosen today to go through some of the ways that we can define what is the lead up in terms of digital performance to an IPO that a lot of people are clearly talking about. We're not dissecting the most recent news. We're going to go back to pre-IPO and look at the ways that we could have possibly foreseen performance. Now, most basically, what we're looking at here is a breakdown of the food delivery market. We're looking at, again, that combination of desktop and mobile traffic year over year leading up to the June announcement of IPO for Blue Apron, and we can very clearly see that Blue Apron is the dominant player with about 42% of the traffic share. We see HelloFresh at about 21%, Home Chef there at 18%, Plated at about 5%, and the rest of the players in the space at 14%. It's clear here that Blue Apron has a stronghold on the industry. As a next step beyond that traffic, we want to look at engagement again. And here we also can confirm Blue Apron's dominance. What we're looking at here is, again, over that same time period of year over year, the domination on not only monthly visits, but unique visitors and visits per unique visitor. Both of those metrics being about twice the average there for the others. We see that HelloFresh is starting to creep up there on average duration of all the engagement metrics. It does have the highest duration and time on site there, as well as the pages per visit. That said, we're still seeing Blue Apron dominate most of these engagement metrics. Even further, when we look at globally, Q4 2015 through Q2 2017, we see the strength of the Blue Apron brand growing. And we see that by dissection here of branded search traffic. So going back to October 2015, we see that about 93% of the traffic onto Blue Apron is branded. By Q2 2017, that's 96%. Again, indicative of the growing strength in brand recognition. Similarweb always wants to start to drive as deep as possible on ways that we can go further on the ways consumers are interacting with the digital properties of a site like Blue Apron. And here we start to see something that may tell a slightly different story. When we actually look at the ways that paid traffic to Blue Apron grew tenfold in the quarters leading up to the IPO announcement. This is a pretty standard metric that our investor clients will dissect, and that is the increase in the ways that brands are looking to present their numbers and look at those numbers being presented higher because of the paid traffic there. It's oftentimes an increase there in paid traffic. It's oftentimes a metric that our investors will see as a lack of quality growth. We can go another step further and actually look here at those unique visitors and visits per unique user. What we see is that while the visits and the unique visitors coming to the site continue to rise, that retention actually drops. And this is something we're looking at here. Prior to that IPO, what we can actually do is look at some market validation of a lot of that data. Here, looking at a Market Watch article from July 1st, so a few days after that S1 was published, what we see is actually an announcement here that beyond seasonality, Blue Apron appears to have an issue with customer retention. Orders per customer incrementally fell from 4.5 in the first quarter of March 2016 to 4.1 in the first quarter of 2017, and average revenue per customer fell from 265 to 236 in the same period. So we can extrapolate that from the publicly released documents. That is a trend that we would have started to foresee here in Similarweb as we're looking at that retention data.
Thank you, Stu. So before we go on to the next section, I just want to remind everyone you can ask your questions through the question pane. We've had a couple of questions so far, but in case you haven't asked any of your questions so far, please do, and we will get to it in our Q&A session at the end. Our next section, we will cover how market intelligence can be used for due diligence as well as optimizing your portfolio performance. And we've taken Naspers here as a case study. As an example, Naspers is a multinational internet and media conglomerate that also happens to be one of Similarweb's main investors. But the case study that we will walk through is an example of how many venture capital and investment firms are using Similarweb today. So I'll pass back to Stu now.
Great, thank you, Jess, again. What we're looking at here is a general way beyond the dissection of market movement. Another way that our clients, especially VC and PE, will leverage Similarweb insights to further the analysis and due diligence processes. Now, when we're looking at the largest company in Africa, a multinational internet and media company, we see that there are really two challenges. And the first is how to best advise, scale, and improve new global VC acquisitions. The second is performing robust due diligence on industries and companies they are still running that initial consideration of investment in. What we're showing there in the visuals is some standard dashboards. Now, these are dashboards that will be built into the Similarweb Pro. It's very much an executive snapshot on the strength, let's say, of an industry or of a specific company. While we're well aware that a lot of this data will oftentimes be pulled into internal systems and indicators across our investment client base, the dashboards are a general way to get that analysis initiated. Now, as a solution to these two problems, we really do see two different approaches to the ways a company like Naspers will drive analysis with Similarweb. The first is a consultative approach, where they will help less data-driven portfolio companies create custom dashboards for ongoing competitive analysis. And more advanced investments will use Similarweb's API to integrate market data into that portfolio company's own internal systems. That's the consultative approach. The second solution is what we see as a driver of internal metrics, where a firm would use a deep dive into the portfolio company's digital footprints versus their competitors' performance. Will benchmark not only the traffic and engagement, but the marketing mix and traffic acquisition channels to best understand what channels are strong or weak. That could then even further be taken back to the consultative approach to actually drive and implement changes in a given position's marketing strategy. So what we'll actually see here is that a company like Naspers will actually analyze an industry they're considering to invest in using mobile and desktop KPIs such as app downloads, traffic volume, bounce rate, and they'll need to go most simply towards answering the question of if a potential investment has a high volume of traffic, is that high quality and sustainable traffic? And that's some of the best practices we've been going through today. One of the things we actually wanted to show is how there is a real success story here in this specific example, where in 2016, Naspers Ventures used Similarweb to analyze the trending meal delivery industry. As you saw in the previous slide, we're looking at a dashboard there. And what we're doing is in dissecting the leaders of that market, we can then go further to follow a recommendation to the strategy team, drive due diligence. What we actually see is Similarweb being a part of the ways that a large investment would have been made in Delivery Hero. This is the post-IPO performance of Delivery Hero. One real life case study here of that data driving internal due diligence.
Great. So I think last but not least, we wanted to sort of wrap up today's webinar and show you how you can ingest data at scale by using Similarweb's API. So far Stu has dived into the SaaS platform itself, and just now we showed you how you can, within Similarweb, you can create your own custom dashboards to really look at the markets and sites that you care about. But we're also aware that a lot of you have your own dashboards and systems and are really wanting to ingest mass volumes of data and integrating that with other data sources as well. So Stu will just give us a quick sort of visualization of
Sure.
how we can do that.
So while, yes, we definitely see research being driven from the Similarweb Pro, we're well aware that the data is going to need to be ingested into systems at scale. And what we're looking at here is just a very simple API dashboard in Google Docs that we've built to show some of the ways when we look at now a selection of domains that represent companies in the Dow Jones Industrial Average. We'll actually start to just show you the ways that that data would populate live from our API systems. Even further, while we're definitely limited here in the ways that we can heat map and build analysis and indicators in Google Docs, I'm going to go further there on the last row here with Zillow.com. We see the last few months showing the highest numbers of traffic. As another example, what we'll do is actually show you a way here in this Excel document that this data would populate again live from the API to ingest that data at scale in your own systems and indications. And again, what we're seeing then on Zillow is when we look at, let's say, a decrease in year-over-year change there at the 1% or the 5% here on Zillow Group, when we look at the larger competitive landscape again in Homes.com, we see the larger decrease when we're looking at that period over period change. This is all data that we can work together and build if we need to talk about templatizing some of these reports. But the vast majority of our investor clients that are integrating the API are looking at the ways we just automated that data there on Google Doc to feed that directly into their systems to, again, drive these indicators more in real time than just on the SaaS. Once we have those real-time indicators, we'll go back to the SaaS for that deeper research to run through a lot of the use cases we just did today.
Thank you so much, Stu, for sharing all of those interesting examples today with our audience, many of whom are already Similarweb customers, so we hope you learned something new today. I'm sure many of you were already familiar with some of the stories we talked about, but we really wanted to give you the idea of how digital market intelligence data is a great proxy for market movements, and that this data is often available well before any public announcements. So just before we go into the Q&A, I want to remind you again to please feel free to download the handouts that we have attached to this webinar that I mentioned at the beginning. So we have a joint report with Crunchbase, a white paper report that covers various investment stories, some of which we talked about today, the Blue Apron IPO and the Amazon and Whole Foods acquisition, and a one-pager high-level document which talks about the different use cases of market intelligence for investors, so you can share that with your colleagues as well and take a look at it yourselves. Okay, so the Q&A, we have a couple of questions that have come in. The first one is quite simple. I think it related to Stu earlier. You were talking about organic search traffic and branded traffic in particular. So we just had a question about what do we mean when we talk about branded web traffic. So I can just explain that when we talk about branded traffic, we mean branded search traffic. So we were looking at a Blue Apron example, and it's when people are searching keywords that include that brand name. So whether that's Blue Apron delivery, Blue Apron careers, or just Blue Apron itself, or blueapron.com, that's what we group together and call branded traffic. And actually within Similarweb, when you're looking at the different keywords driving traffic to a site, you can filter by different options, one being branded versus non-branded, one being organic versus paid, depending on what's the what you're looking to analyze. Stu, anything to add to that around branded search traffic?
I think that covered it.
Great. The next question we had was, so we talked about, we showed the SaaS today, and also at the end we spoke about our API, and the question we have here is, how do most of our existing customers ingest the Similarweb data? Is it via the SaaS platform? Is it via the API, or are there any other ways? Stu, do you want to take that one?
Sure. No, that's a great question. I'd start by saying that the channels of data ingestion are going to be inherently complementary, and we see that across our client base, across the ways investors are using the data, whether it is from the Similarweb Pro SaaS platform or through the API and integrating into internal systems. That said, I can go a little bit deeper, and I think define two buckets. So when we're looking at our hedge funds, specifically the quant funds we're working with, that are looking at market level movements surrounding individual investment performance and positions at scale, not only the large competitive sets, but then across multiple markets, that's a use case that's going to be more aligned with the API, as Similarweb is one of a handful of alternative data sources that are driving and integrating into core data sources. The second bucket would be VCPE use case, which, yes, while they'll still build dashboards, while they'll still integrate that data directly into systems to build dashboards, it's going to be reliant there on the dashboards fueling indicators, which will then drive back to the pro to drive the deeper research, to visualize trends, to uncover those marketing strategies. So yes, while through and through the different channels of data ingestion are complementary, I think that we could probably, across our investor base, break those down into two somewhat distinct buckets.
That's great. Okay, the next question we've had was regarding the API section at the end. Do we have a tutorial for linking Excel spreadsheet to Similarweb's API, or is it just a Google spreadsheet? So I just want to re-emphasize that our API is delivered essentially in like a URL structure that you can code into your own systems and dashboards, but at Similarweb we did just create a sort of template dashboard in a Google spreadsheet, which we'll be happy to share with any of our customers. So that's a super simple way. You don't need to be a coder. You can just choose the metrics you're interested in. As Stu showed, it loads live as you change the metrics, the dates you're looking at, etc. So you can do that within a Google spreadsheet, or you can integrate our API into your own systems as well.
Yep, and I just add to that quickly that our teams are trained through and through for those launch processes, not only to define the integration, but upon the initial integration, work through best practices on building out templatized reports. It's a process we run all the time and know through and through.
Another question we have here is, they've said we seem to have lots of great data. That's very nice to hear. But how do you help investors quickly get to the key insights without spending lots of time digging around in the data? Stu, do you want to take that one?
Sure. This is something we talk about all the time with our clients globally, even those that are not investors. And that is always wanting to integrate Similarweb in such a way that we are building indicators of insights without, of course, creating more work. It's why we built out professional services arms and customer success with those that specialize in not only financial analysis, but specific industries as well, so that we can make sure that while we know the time is limited, we are defining the specifics of each of our clients' needs so that those integrations minimize the amount of time digging around, to use the exact phrase.
Okay, we probably have time for one or two more questions. So we have one here that says, I am a VC and we invest in early stage companies and startups. and what are the most important metrics that they should be looking at? So I think one of the challenges that we know with early stage companies and startups is there often isn't huge volumes of activity that you can analyze yet. But I think one of the great things about Similarweb is that you can look at any website or industry in the world. And so although the company that you may be considering investing in doesn't have the activity yet, you can look at those leaders in its market. You can build your own sort of custom industries within Similarweb to really analyze the niche market that this company sits in, and sort of understand the trends and the direction of growth of that niche industry, which should give you a good indicator of the future performance of a company you're interested in investing in. Stu, I don't know if you have anything you want to add to that.
Yeah, I'll add a bit quickly because the VC use case is one we're very familiar with. I'd go further and actually talk through the ways that the data at scale on investment or on the API side of things can look at tracking specific markets and existing players to define addressable markets that an upstart may be entering into. And even further, the data can oftentimes be used as a source of truth when we look at a small company in its decks presenting the size and scale of the digital footprint and performance. Oftentimes at that stage of analysis, our VC clients will use Similarweb as, again, that third-party source of truth relative to what they're seeing in investor data.
Thank you. Okay, last final question before we end is there a way to filter all websites for whether or not they are public companies, or to create a filter for, say, the biggest change in traffic for websites with over 1 million monthly unique visitors? So essentially, are there different ways of chopping and changing the data? So I think, first of all, I would say, as I mentioned before, you can build your own custom industries within Similarweb. So if you want to look specifically at public companies, we can do this in two ways. Either if you have the list of companies that you're looking to analyze as an industry, you can just very easily create that yourself. But we also have some custom reporting options where we can filter for, like an example you said, if we want to just look at sites that have over 1 million monthly unique visitors, but if you're not sure what those sites are, then we can do some custom reporting around that as well. If you know the list of sites you're looking to analyze, you can just very easily copy and paste that, drop that into a dashboard or within the Pro itself. Okay, I think that is all we have time for. I'm sorry if we didn't get to all of your questions today, but thank you so much for joining us. Thank you so much, Stu, for your wonderful presentation, and have a good rest of the day, everybody. We will be following up with a recording in case you want to share that with your colleagues, or if you want to listen to it again. And we also really encourage you to reach out to our product consultants to learn more about how market intelligence data can help you. Thank you.
Thank you, Jess. Thank you, everyone.